You're about to witness something that almost no one is talking about, something that could quietly reshape global wealth as we know it. For years, silver has been called gold's poorer cousin, the forgotten metal, the second-tier asset that only jumps when gold tells it to. But what if I told you that one of the largest economies on Earth is silently, methodically, and secretly accumulating silver at a pace not seen in decades? And no, it's not some random hedge fund or a billionaire investor betting on a short-term spike. It's China. Welcome back to Macro Truth, and I promise you, by the end of this video, you'll never look at silver the same way again. Before we dive into the secretive stockpiles, the quiet shipping manifests, and the jaw-dropping price implications, do me a quick favor, hit that like button, and subscribe to Macro Truth right now. It takes half a second, and it tells the algorithm that you want more of this deep, no BS analysis. Trust me, you don't want to miss what's coming next. So what exactly is happening? For the past several months, analysts who track global commodity flows have noticed something bizarre. Official trade data shows China importing silver, yes, but the numbers don't add up. There's a massive gap between what's being reported and what's actually moving through ports like Shanghai and Hong Kong. We're talking about hundreds of millions of ounces of silver that seem to disappear into Chinese vaults without any public announcement. No press release, no strategic reserve declaration, nothing. Just silence. Meanwhile, the Shanghai Futures Exchange has seen its silver inventories explode to record highs, while COMEX and LBMA stocks have been quietly draining. You don't have to be a Wall Street veteran to smell a coordinated move. This is not random hoarding. This is state-level accumulation. Now, why would China want so much silver? The obvious answer is industrial. Silver is not just a shiny metal. It's the most electrically conductive element on the planet. Every solar panel, every electric vehicle, every 5G tower, every smartphone, every military-grade communication device needs silver. And China dominates the production of all those things. They make more solar panels than the rest of the world combined. They manufacture more EVs than any other country. They're rolling out 5G infrastructure at a breakneck speed. Each one of those technologies consumes silver in quantities that are mind-boggling. A single solar panel uses about 2/3 of an ounce of silver. Multiply that by the hundreds of millions of panels China installs every year. And you're looking at hundreds of millions of ounces of demand just from one sector. But here's the kicker. China doesn't produce nearly enough silver domestically to meet its own industrial needs. They've been a net importer for years. But what we're seeing now is way beyond industrial demand. This is strategic. Let me paint you a picture. Back in 2022, China imported roughly 350 million ounces of silver. That was a lot. In 2023, that number jumped to over 400 million ounces. But the real story is in the first half of 2024. Data from Chinese customs, adjusted for discrepancies in Hong Kong transshipments, suggests they're on pace to import over 500 million ounces this year. That's nearly half of the world's annual mine production. Half. And that's just the reported stuff. Independent analysts who track leased silver, physical deliveries into the Shanghai Gold Exchange, and over-the-counter deals believe the real number could be 20 to 30% higher. When a country like China starts sucking up half the world's above-ground silver supply, something has to break. Prices don't just stay flat, they explode. But wait, there's another layer to this that most people completely miss. Silver has always been money. For thousands of years, it was the everyday currency of empires, and China knows this history better than anyone. For centuries, China used silver as the backbone of its trade with the West. They called it the white metal, and they hoarded it whenever they could. Fast forward to today, and what are we seeing? A quiet de-dollarization movement. Russia, China, India, Brazil, they're all reducing their reliance on U.S. treasuries and dollar-denominated assets. Gold is the headline grabber, yes. Central banks have been buying gold at record levels. But silver is the stealth asset. It's cheaper, it's more accessible, and it's arguably more critical for the next phase of technological warfare. If you're China and you're looking at a future where U.S. sanctions could cut you off from global finance, what do? You stockpile physical metals that no one can freeze or seize, gold for the big picture, silver for the daily grind of industry, and, if necessary, a new monetary system. Now let's talk about what this means for you, the viewer. If you own silver, you're probably excited. If you don't, you might be wondering if you missed the boat. The truth is, the price of silver has been artificially suppressed for years. Now, the paper market, futures contracts, ETFs, derivatives, trades at volumes that dwarf the physical metal. Banks like JP Morgan have been fined multiple times for manipulating silver prices. And that suppression has kept silver cheap relative to gold. Right now, the gold to silver ratio is hovering around 85 to 1. Historically, when that ratio gets above 80, it tends to snap back down to 50 or even 40. In other words, silver is historically cheap compared to gold. If that ratio simply returns to its long-term average of 60, silver would be over $40 an ounce. And if China's buying continues, we could see a true decoupling from paper prices. Here's where the story gets really interesting. The physical silver market is much smaller than most people realize. The entire world mines about 800 to 900 million ounces of silver per year. But mining production has been flat for a decade. There are no new giant silver mines coming online. Recycling adds maybe another 150 million ounces. Total above-ground supply is around 1 billion ounces a year. Now subtract industrial demand, which consumes about half of that. Jewelry, electronics, solar, EVs. That leaves roughly 500 million ounces for investment and official hoarding. If China alone is secretly stockpiling 500 million ounces a year, then there's almost nothing left for anyone else. The rest of the world, India's massive silver appetite, European industrial users, North American retail investors, they'd all be fighting over scraps. That is a recipe for a price spike that would make the 2011 silver rally look like a gentle hill. But macro truth isn't in the business of hype without evidence, so let's look at the smoking gun. Take a look at COMEX silver inventories over the last 18 months. Registered silver, the metal available to be delivered against futures contracts, has fallen by nearly 60%. Where did it go? A huge portion was shipped to Switzerland, then to China. The London Bullion Market Association, the LBMA, has seen its silver vaults decline to the lowest level in 7 years. At the same time, Shanghai's silver premiums have been consistently higher than international prices. That's a classic sign of physical scarcity. When buyers in China are willing to pay $2, $3, sometimes $5 over the spot price just to get their hands on bars, you know something is up. Normally, arbitrage would kick in. Traders would buy cheap silver in London or New York and sell it at a premium in Shanghai. But that arbitrage isn't happening as efficiently anymore because the sellers in the West are realizing they might not be able to replace the metal. The market is whispering that the physical squeeze is real. Now let me address the skeptics. Some will say, but China has always bought silver for industry. This is nothing new, and that's partially true. But the scale and the secrecy are what changed. In the past, China's silver imports were steady, predictable, and well documented. Today, we're seeing bulk shipments routed through third countries, mislabeled cargo, and a deliberate lack of transparency from state-owned corporations. This is textbook strategic accumulation. The only other time we saw behavior like this was in the early 2000s when China started quietly stockpiling rare earth elements. Back then, everyone thought it was just normal industrial buying. A decade later, China controlled 80% of global rare earth production and used that leverage as a geopolitical tool. Silver is far more widespread, far more essential, and far more liquid. Imagine if they pull the same move with silver. Let's think about the timing. Why now? Because the world is shifting toward a multipolar monetary system. BRICS nations are discussing a new gold-backed trade currency, but gold is expensive and bulky for everyday transactions. Silver, on the other hand, is perfect for settling smaller trade balances. A silver-backed digital token, for example, could allow countries to bypass the US dollar entirely while still holding a tangible asset. China has been experimenting with digital yuan for years. Connecting that digital currency to a physical silver reserve is not science fiction. It's already being piloted in some Belt and Road Initiative projects. And if that happens, demand for silver would skyrocket beyond anything we've ever seen. We're not talking about a 50 or 100% increase. We're talking about a multiple of today's price. Now I know some of you are thinking about the Hunt brothers. For those who don't know, back in 1979 and 1980, the Hunt family tried to corner the silver market. They drove the price from $6 to nearly $50 an ounce, and then they failed spectacularly when the exchange changed the rules. But here's the difference. The Hunts were a single family fighting against the entire financial system. China is the world's second largest economy, with $1 trillion trade surplus, state-owned banks, and a government that can rewrite commodity rules overnight. When China decides to buy silver, they're not trying to corner the market. They are the market. And they don't need to borrow silver or leverage futures contracts. They can buy physical metal, put it in a vault, and hold it for 20 years. That kind of buying power, combined with declining mine production and exploding industrial demand, creates a fundamental shift that no amount of paper short selling can contain. So where does the price go from here? I don't have a crystal ball, and macro truth always tells you anyone who gives you an exact price target is either lying or selling something. But we can look at historical precedents. In 2011, silver hit almost $50 an ounce on fears of inflation and financial instability, even though industrial demand was much lower than today. Today, we have higher industrial demand, tighter supply, central bank gold buying at record highs, and a major power quietly accumulating physical silver. Inflation is still above target in most major economies. Real interest rates are negative in many places, and the US debt is growing by $1 trillion every few months. In that environment, silver could easily surpass its 2011 highs. Some analysts I respect are calling for triple digits within 3 to 5 years. Others say $80 by the end of 2025. The point is not the exact number. The point is that the risk-reward ratio for silver right now is asymmetrical. The downside is limited because production costs are around $15 to $18 per ounce. The upside is massive because of the structural deficit we just described. But here's the most important part of this entire video. What should you do about it? I'm not a financial advisor, and this is not investment advice, but as someone who studies global macro trends for a living, I can tell you what I'm watching. Physical silver in your hand, coins, bars, rounds, is the safest way to play this trend. Paper silver like ETFs or mining stocks can also move, but they carry counterparty risk. The whole thesis of this video is that the physical market is tightening. The last thing you want is to hold a paper promise when everyone else is scrambling for the real metal. Also, remember that silver is volatile. It can drop 20% in a week for no reason just because some futures contract got sold. So if you buy, be patient. Don't use leverage. Don't panic sell on a dip. This is a multi-year story, not a get-rich-quick scheme. Before we wrap up, I want to leave you with one final thought. The mainstream financial media isn't covering this. You won't see headlines about China's secret silver hoarding on CNN or Bloomberg. Why? Because it doesn't fit the narrative. For decades, the dollar has been king. The idea that a physical metal could challenge that supremacy is uncomfortable for the establishment. But uncomfortable truths are exactly what macro truth is about. We dig where others don't look. We connect dots that others ignore. And right now, the dots are forming a very clear picture. China is accumulating silver on a scale that could change the balance of power in the precious metals market for a generation. Prices will follow. It's not a matter of if, but when. If you made it this far, you're exactly the kind of viewer who makes this channel worth running. So here's my ask. Drop a comment below with your take on silver. Do you think China's buying will push prices past $50? Are you stacking physical silver, or do you prefer miners? Let's get a real conversation going. And if you found value in this breakdown, do me a huge favor. Share this video with one friend who needs to hear it. Not 10 friends, just one. Because that's how real information spreads, person by person. Also, make sure you've hit that subscribe button and turned on the notification bell so you don't miss our next deep dive. We've got episodes coming on the coming oil supply shock, the true state of the US commercial real estate market, and why the Japanese yen might trigger the next global crisis. Until then, stay curious, stay skeptical, and remember, the truth is always more interesting than the headlines. This is Macro Truth signing off.